So Eternal is a company which is now selling goods worth 1 lakh crore rupees because they already have 50% market share. They can't gain much more. That the food delivery business is not growing as much now, then Zomato can be valued at around 1 lakh crore rupees. And I don't think it is going to happen. 60% CAGR, those days are over for Eternal. And now the big thing which is happening is that Amazon now is entering the business. Flipkart Minutes has already entered the business. JioMart is there, and they are actually opening a lot of stores. Hey my friend, this is Prajwal. Eternal released their quarterly numbers and the stock rose over 4% immediately after that. But the stock was already trading lower throughout the day in anticipation of the results. So it seems like the market is fully confused. So now, let's fully understand what is going on in the company. So we are going to study their investor presentation and decode everything bit by bit. Okay, so the headline numbers look really great. The net order value is up 54% to 26,000 crore. The revenue and EBITDA are up 160 and 186% respectively. So everything looks astronomically great and amazing. But is it so? So let's look at it in detail. We can see that the food delivery business, for that the net order value is has grown by 19% to 9,757 crore. So this is kind of a stable number. That their food delivery business, which is Zomato, is growing by 19%, and it is a believable number. It is kind of a number which we can see in the future as well. But the adjusted revenue has increased 30%. So the net order value is only increased 19%, but the revenue has increased 30% because they have basically started charging more commissions on their order. So even if the net order value is increasing only by 19%, the revenue is increasing by 30%, which is a good number. And Zomato is amongst their top business, which has really touched the scale, and it is not growing very fast now, but it is a stable and kind of a decent growth business, right? And this is the only business which is highly profitable for Zomato, for Eternal. And the EBITDA is now 532 crores, which has increased by 100 crore over the year. So this is the business which is profitable for them. Now, quick commerce is the next big business. Actually, it is the biggest business of theirs, but it is not that profitable yet. But the scale is higher. The net order value is 14,000 crore this time, with a 95% year-on-year growth, and the revenue is just astronomical. It looks like 674% growth, which means that revenue has increased 6 times. But it is because of the business model change that they did, which was that previously they just used to show the revenue as the commission they used to charge, but now all the goods they sell, that is also counted as revenue. So let's not fall into these growth numbers and check them in detail. Okay, actually the Y-on-Y number, year-on-year growth numbers will be higher. So what we are going to do is we are going to check them quarterly, and that will actually show us the real picture. So EBITDA has also increased for the quick commerce, and actually this is the first time or second time where it has become EBITDA positive. Previously it was a EBITDA losing company, EBITDA losing business, but now it is turning profitable. And we are going to skip going out and their hyper pure business, because either these are very small or not profitable. So here is an interesting question which Albinder has answered. Albinder is the group CEO, and he is saying here that the growth rates have naturally moderated now, but over the next 3 years, the net order value could grow with a CAGR of 60%. Now that is a very optimistic talk, and I don't think it is going to happen. 60% CAGR, those days are over for Eternal. Let's understand why. Now coming to the revenue. So the food delivery business did a revenue of 3,000 crore and the quick commerce did 13,000 crore. And overall revenue was 17,000 crore rupees. And if we look at the growth of these businesses, quarter on quarter, we see that the food delivery business is not growing as much now. It is actually has grown only 2.4% quarter over quarter, and even yearly the growth is 30%, which looks high, but quarter on quarter it is only 2.4%. So if I multiply it by 4, it will become around 10 or 12. So that growth which Zomato used to give is no more available now, because Zomato has already saturated the entire market. It has penetrated the entire India, even tier 3, tier 4, tier 5 towns. Smallest of towns we found Zomato is there. So the scope of growth is not much, but it is a stable company with a high profit margin, and a decent growth will obviously be there. The organic growth will be there. On the quick commerce side, the quarterly growth is 8%, which is good, but it is nowhere close to 100% or 50% what they were giving a few quarters before or a few years ago. And it is not like this 674% which is shown year on year here. So this also has actually plateaued, and if I multiply 8% into 4 times, so annually we could see 30-40% growth. That is what they are delivering, right? And this is their main engine. Blinkit is their main engine of the entire business, because Zomato has already like slowed down. In the others we can just skip, okay? And when we come to EBITDA side, we can see that the food delivery business is the one where EBITDA is there, which is profit. And we can see that over the last 2 quarters the growth is not there. So to expect that Zomato, the Eternal is going to give a growth of 50-100% is unreasonable. So let's try to evaluate the company now. So as of now, the company is a 2.5 lakh crore rupees company, right? And if I take Zomato out of it, so Zomato is basically giving 500 crore EBITDA every quarter. So multiply it by 4, it becomes 2000 crore. 2000 crore worth of EBITDA the company is giving annually. And if I give it a valuation of 50 times EBITDA, not price to earning multiple, the price to earning multiple would be around 100, which is actually very high. But considering that it is a platform business, high margin business with almost a monopoly or duopoly, and it is a new emerging business, so 100p is something which is reasonable. Although the growth has actually slowed down, but it is still going to grow at like 15, 20 or those kind of numbers, right? So Zomato on its own is generating 2000 crore rupees of EBITDA, or around 1000 crore rupees of profit after tax. So, and if I give it 100 price earning multiple, then Zomato can be valued at around 1 lakh crore rupees. Okay, so this is my estimation, but say somebody wants to argue with me, they might say, no, it shouldn't be 1 lakh crore, it should be 70,000 crore, or somebody might say it might be 1.5 lakh crore rupees. But generally that is the range, and I am giving it with a very not very conservative, but a high valuation. So if I take Zomato out of it, and if somebody is saying that no, 1 lakh crore is too much, then maybe add Hyperpure and their district business, going out business along with it. So that at least becomes 1 lakh crore rupees, right? So now the question is, out of 2.5 lakh crore, 1 crore we have given to everything else. Now the question is whether quick commerce deserves 1.5 lakh crore worth of valuation or not. That is the question. And it is a company which is, it is a business which is generating 13,000 crore of revenue quarterly, and annually it would actually generate around how much? 60,000 crore rupees of revenue. And it is actually comparable to DMart. DMart is actually generating around 70,000-80,000 crore rupees of revenue. So it is that kind of revenue and that kind of growth which is actually showing up in the market cap of the company. Because valuating Zomato is very easy, just like we did right now, because it is a stable, profitable company. Quick commerce is not showing any profit as of now, and we can see that previously the losses were higher. Now the losses are gradually converting into EBITDA profit, right? So here are some other numbers for the food delivery business, which is basically showing us that the growth is in the 14-15% range, and it is going to be very stable from now on. They will basically continue to increase charges and the profits will grow, but the revenue will not grow at very high rate. 15-20% is kind of decent, and that is what they say in their investor calls as well. Whereas in quick commerce, previously the growth was very high. We can see that from last year 7,000 net order value, it has now touched 14,000, which is 100% growth. But in the last quarter, only 1,000 crore rupees was added. So that growth has actually slowed down. And now the big thing which is happening is that Amazon now is entering the business. Flipkart Minutes has already entered the business. JioMart is there, and they are actually opening a lot of stores. Amazon is opening around 1,000 stores. Flipkart is going to open 800 stores. JioMart is also coming up. So they are going to face competition, and even to maintain this market share would be difficult. As of now, Zomato holds around 50% market share in the quick commerce space, but they will not be able to hold it now, and they will basically and the thing that we saw, that they were trying to increase their EBITDA, that will also now slow down, because competition will be very high and they might actually lose market share. And the negative side of having a big market share is that you can always lose it, because they already have 50% market share. They can't gain much more. They're only going to lose it. So the entire idea is now that the market share which they commanded and the growth they commanded, it is not going to be there in the future. So that's why I think we have seen the best of Blinkit for now. The growth will not be coming in the future. Now let's see that how much from the revenue they are able to generate as profit. Out of 14,000 crore rupees, 13,000 crore is actually their revenue, and the gross profit, the profit which is just by selling the after removing the cost of goods sold, is 3,867 in this quarter. And the contribution is the real profit which comes to them. Otherwise it is shared with the supplier, and running also while running the business, the expenses are cut. The contribution is 782, which is 5.4% of the net order value, and the EBITDA which they are generating is just about 37 crore, which will obviously increase, and they target that the EBITDA will increase to 5%. So the contribution which we are seeing here, 782 crores, that might be EBITDA in the future, in couple of years, right? And in couple of years, if let's say from 14,000 crore, the revenue actually becomes, say yearly it becomes 1 lakh crore rupees. Right now it is 60,000 crore rupees. But if it becomes 1 lakh crore rupees and the EBITDA is 5% of that, then the EBITDA will be around 5,000 crore rupees, and the net profit would be around 2 to 3,000 crore rupees. And on the basis of that, if at that time we valuate it at 50 price earning multiple or 100 price earning multiple, at that time the company might actually be worth 2 lakh crore rupees, right? If 2,000 crore worth of PAT they are able to generate, the business might be worth 2 lakh crore rupees. What is it? What are we valuating it as of now? 1.5 lakh crore rupees, right? Because 2.5 lakh crore rupees is the entire company's market cap. 1 lakh crore rupees we attributed to Zomato and other businesses. So 1.5 lakh crore was attributed to Blinkit, and we are valuating that after maybe 5 years, if they are able to grow their revenue to say 1 lakh crore rupees after facing a lot of competition, and they are able to grow their EBITDA to their target of 5%, then at that time they will be able to generate a profit of 2,000 crore rupees, which is in the far future, which is going to take maybe 5 to 6 years. And at that time, if the company still valuates at 100 price earning multiple, which is great, like 100 price earning multiple is so much that very rare companies, very few companies trade at this price earning multiple. And even if that, all of the optimism being put in the numbers, then we can say that Blinkit might be worth 2 lakh crore rupees, right? So if everything goes well, after 5 years, maybe we can say that the valuation of the company is worth it. The thing that we can see from this is that from the last quarter, the revenue is actually increased only 1,000 crore rupees, and that is after they have already opened 200 more stores. So the number of orders have actually increased for them. Even after that, the revenue did not increase that much. That means the growth is over for now. Their actual target of total number of stores is 3,000. So even if they open 3,000 stores, the revenue is not going to cross 1 lakh crore rupees in the near time. And with high competition, it seems like these are the best days for Eternal, and for some time it is going to consolidate. So let me know in the comment section whether you think the company is worth buying or not. Thank you for watching.